Hey traders, Nick Shaheen here looking at oil stocks. I want to concentrate on a couple of the big ones, Chevron and Exxon. I prefer Chevron, not for the fundamentals, for whatever reason. It trades better than Exxon. I'll show you what I mean. I'm going to go to a monthly chart. This is Chevron and this is Exxon. So before this collapse, Chevron had an ascending trend, whereas Exxon was already in the dumps and couldn't maintain the same level. See how, if you look at it, it's just going up, higher lows. And if I go to Exxon, it had already stagnated flat for a long time. So I don't know what the reason is. Maybe that means that it has more upside, but now that they're both down to 2000 level, it doesn't even matter. But I'm going to stick with Chevron because it has behaved better. Plus, I do have a little better body English for it, kind of a thing, where I've looked at it more often than Exxon. They both pay a lot of dividends. And the point is, okay, but what if the dividend is in danger? I already shared a write-up with those who get the newsletters. So the idea of them cutting the dividend, I think, is far out of the realm of what they're going to do, because they said that when the CEO came out, and the CFO, which is more important, the CEO is usually a rah-rah person, but not in this company. But even better, the CFO, which is usually a person that actually raises the flag, said that the measures they're taking now is they're cutting back spending to like 20 billion. And I think he said 20%. So I'm going to do the math, air math here, and they cut out 4 billion right away from spending this year. And the more important number is that they still have 16 billion to play with. So if the crap hits the fan before they cut the dividends, they have 16 billion to cut from spending. So they're spending still 16 billion. That's not a scared company. That's a company under control. That's a ton of money. And they're probably going to use some of that money to pick up assets on the cheap from people who are struggling. So people say, how do I catch the oil falling knife? I would rather bet on a company like Exxon, because Chevron or Exxon, because it can rally with markets even if oil is falling. So oil is, let me see here, the USO, for example, bottomless pit. So if I want to bet on it, it'll just be a lottery ticket, and I need oil prices to rally. Whereas if I buy the same lottery ticket in Chevron or Exxon stock, selling put spreads, which I love, I shared, never mind. If you get the note, you saw what I shared. It's a beautiful trade. Or buying Apple calls or double call spread. So I need time on the clock. They can rally with the market even if oil is falling. And the actual manipulation in the oil market is insane. This is oil. And if I put the overlay, all the junk that they announce, Saudi summit, cut deal, OPEC basically came out and supported price. Yeah. Normally, OPEC wants it between 50 and 61, 62. That's where they make the most money without losing market share. Well, now it's a completely different ballgame. Why? Because the price of oil fell on demand. For the first time in decades, I think for the last, 10 years maybe, we haven't really traded demand. We've traded speculation. But this is a haircut in demand. Nobody's driving. Nobody's flying. So demand on gas. I know the gas stations say, the guy from Flying J said they saw a drop of 40%. I bet you it's more. I haven't filled up my car in so long. My son hasn't asked me for gas money in so long. So it is more drastic than they're saying. So let's say it's a haircut of half demand. So it's an actual demand price move, and it's a little different. So if I wanted to bet on something, I'd bet on the company that trades off of it. They'll figure it out. They'll figure out a way of making money in this new low oil price thing. They're not expensive. As far as companies, CVX and XOM, they're not expensive. They pay a dividend, and so I'm okay waiting for them to recover. Meanwhile, if I wanted to bet on the oil, instead of doing the XLE, because the XLE is really 40% of it is two companies, Exxon and Chevron. So I'd rather bet on those companies and not take the junk that comes with it. I don't know what's below it. I'm pretty sure Occidental is in it in the top 10, and I don't want that garbage. So I would rather bet on the price of oil, and I underscore the word bet. I don't know where it's going. This ETF is heading down to zero for some reason. is it an ETF or an ETN that I think about? It doesn't matter. USO fund. And I would bet on it, literally bet on it, by either buying it down here or buying a call spread in it or just straight up call near the money. So out in time. So I want it to rally back to whatever level. And I can do it by naked calls or by debit call spread, like I buy the $6 or $5 call and sell the $8 or $7 to lower my cost. So the entry point would be like pennies, like 15 cents, and the upside would be like $2 or $1.50. So that's the kind of, quote, bet I can do. I don't know where oil price is going to go because I don't know where demand's going to go. If they're going to lock us out in the house for months, it's not going to go anywhere for a while. So any bet I make on oil would be on a headline, freak headline, or just time. Here we have descending prices, ascending some sort of a relative strength. I don't know if I can bet on it, but hey, it's $4. Why not? The XLE could be in better shape, but because it's actual companies versus a commodity there. So anyway, these are my thoughts on these companies. Catching the falling knife with both hands, I couldn't do it because we have so much unknown. We've never had this issue before. We've had this or that or this or that, but not this, and that at the same time. So plus we have a flat out three-way war where two people don't think they are in a war against each other. So we've got Saudi Arabia waging war on Russia, who is waging war on the United States, where the United States has got blinders on, like nobody's firing at us. Meanwhile, they're both firing at us indirectly, one directly, one indirectly. So Russia's happy that we're losing money. We, as in our exploration and oil companies, are losing money, versus Saudi Arabia was happy everybody else is losing money. But OPEC is not Saudi Arabia. Saudi Arabia has money right now, so they can subsidize their social economic programs, but the rest of them are starving for money. So pretty soon they'll put pressure on Saudi Arabia to finish this war that they have going on. So maybe that's the headline. Probably not going to be everybody's back to work, so demand's going to fly off the shelf. So if I were to put a trigger, what are we looking at here? XLE, I'd put it here or higher a few pennies. I'll show you why higher. So here would be the actual trigger, but what about this? This is alleged that, the carrot is this, filling the gap all the way up to 42, but we're so far from 42. So if I were putting a note, I would say, 42 question mark, so that's the carrot, with 32-ish resistance. And I'll know immediately why if I look at a chart. So anyway, these are my thoughts, and this would be kind of a cup and handle thing, technical. I don't know anything about the fundamentals. Nobody does. It's complete gambling at this point. I mean, the wild action in the futures market, whoever's trading the futures in this one has big gonads and is making or losing a lot of money. Nick signing out.